Coming up, over to you, Mark and Mario. After the Fed's dovish tilt, it's the ECB and BOE's turn to steer markets. But first, plenty of trading on earnings today after another raft of results. Let's start with the banks. The turnaround continues at Lloyds, so much so that it's back in profit and thinking about restarting its dividend. And that's a key part of the government starting to offload its 39% stake in the bank, of course. Profit came in at £2.1 billion, despite another £500 million hit from mis-selling insurance protection. And SocGen defying Europe's slump, earnings at France's number 2 listed bank, more than doubling, beating forecasts on the back of a surge in securities trading and profitable foreign retail operations. Profits stolen at Shell, the oil major taking a $700 million hit on oil theft in Nigeria and the impact of a weakening Aussie dollar. Do watch my interview with Shell CEO Peter Vosa on Insider and Reuters.com in about 15 minutes from now. Quick note that profits at Italian rival Eni were down 55% in Q2. In autos, it may be the ultimate driving machine, but profits are down in line with forecasts at BMW, the luxury car maker giving away more discounts in Europe and spending more on fuel-efficient technology. And patent problems for Big Pharma. AstraZeneca sales hit after a wave of patent expiries, while earnings tumble almost 25% on higher taxes. Sanofi cutting its 2013 forecast. Profits of the French drug maker hit harder than expected by patent losses and currency fluctuations. Throw in official Chinese factory activity data showing a small acceleration, and it's likely to be a busy day in financial markets. Let's get to Alistair McCaig, market analyst at IG. Morning to you, Alistair. I want to start with Lloyds if we can. These are pretty positive numbers ahead of this offload from the government, right?
Yes, it does bode very well for the government, and certainly it was always going to be Lloyds was the first that they were going to try and disentangle themselves from ahead of RBS, a considerably easier project to do. And when you bear in mind that sort of break-even price is 63 pence, we're well above that, comfortably above that, turning profits. I suppose the fact that they've only had to allocate another 500 million to the mis-selling of PPI, when you bear in mind that Barclays had to tag another 1.35 billion, is in itself encouraging. A lot less fears down the road, becomes a considerably more attractive proposition, and it does bode well for the government managing to push ahead with this.
And there's been a lot of talk on the back of this Barclays rights issue that a lot of the money, the potential money, is going to get sucked out of the market for Barclays, and that's going to affect Lloyds. What do you make of that?
Well, I think the positive thing as far as these figures are concerned, and the fact that they're even talking about having to start paying dividends again, is the fact that they seem considerably less likely to need to come back to the market. I guess if timelines and possibly ratios get altered as far as the oversight banking committees are concerned, and they start tweaking these figures somewhat, then Lloyds might need to have to look at that. But at the moment, it does bode well. You certainly wouldn't want to be second or third in the queue to go to shareholders and seek funds.
All right. On Shell, it doesn't look great, the overall picture. They took this $700 million hit on the back of Nigeria and the Aussie dollar. That said, how much are they going to benefit from this overall BP hit?
Yeah, I guess there's two things you're looking at here. You're looking at the actual figures themselves for the company, and year on year, that second quarter is effectively down $1 billion. So it really is pretty disappointing. Yes, it's a hit, but it's a sustainable hit, and it's a quantifiable amount of money as well. I think the issue with BP, of course, is that they're down to the last 300 million of that compensation fund, the 20 billion they'd originally allocated, and they're obviously going to have to come back to the table with fresh funds there. The compensation claims are open until April 2014, so there's almost the best part of 3/4 of a year for people to come in with fresh claims, and the quantity of claims have been rising, not falling. So to a certain extent, Shell will benefit because it's the best of a bad pair.
Just a quick final word on overall markets. No new firm steer from the Fed. Got the BOE, the ECB today. Yesterday was pretty lively. Are you expecting anything today?
To be honest, we weren't really expecting yesterday to be as lively as it was. Certainly for the start of the week, it'd been very quiet. Did very much feel like we're in that sort of holiday season, and volumes had drifted lower, and there were a number of faces off the trading floor. So I guess it was quite a surprise. But there again, the unemployment figures that we saw from the European Union was a bit of a surprise yesterday as well. Quite a lot of corporate news flow again today. I'd be very surprised if the Bank of England or the European Central Bank did anything as far as radical changes are concerned. Because volumes are so much thinner, volatility is that much more likely to be aggressive. It would be a little bit reckless maybe for either of those two institutions to spook the market one way or t'other.
All right, Alistair, thanks a lot. Right, I want to leave you with our pick of the day. Sad scenes of the cleanup in Koh Samet after a leaky pipeline spilled 50,000 litres of crude oil into the Gulf of Thailand on Saturday. Officials say it could spread to the mainland coast and affect the fishing industry. Tourists are pouring off the island while soldiers and volunteers in hazmat suits struggle to clear the oily sludge off the white sand. I'm Axel Threlfall, this is Reuters.